Hey, Eric here from 5minuteinvesting.com, and my mission is really to help people without financial background to master stock investing and target 30% from the market. So in this video, I want to talk about psychology and psychology when it comes to investing and whether you're gambling or not. And this is I wanted to make this video after chatting with one of my subscribers because he described himself as gambling. So there are a couple of people who invest in the market when in fact they're gambling. So if you go Google, gambling versus investing, you're going to find a lot of articles on this. So when do you classify yourself as a gambler instead of an investor? And how do you get out of gambling mentality into an investor mentality? So let me just take a step back and tell you what happened. So I was on the call with a subscriber, and let's say his name is John, and John basically said that he lost millions of dollars. And I was like, okay, how did you lose millions of dollars? And he was like, well, initially I started day trading with $1 million. And I was like, okay, that's actually a pretty high amount for a person who day trades. And then initially he was earning some money, but then afterwards he just starts losing and losing and losing, and eventually he lost all $1 million. Now, afterwards I suppose he was quite angry, so then he decided to put another $1 million in. So then he lost that as well. And I think within 1 year, he lost $2 million. And I totally understand how he feels, because when I was day trading many, many years ago, I think over 12 years ago, I would blow my account within a month. And I actually had experiences where I would blow my entire account within a week or even 3 days, and I would have to put money in again. So when you're day trading, you're using leverage. And he actually said that using leverage is a bad idea because it actually burnt his account. And if you don't know how to use leverage, then you should not use leverage at all. And using leverage is probably one of the fastest ways you can blow your account if this is not done correctly. And I totally understand his pain because I also went through that traumatizing experience many years ago. So what happens when you find yourself that you're gambling? The first thing you should do is stop. The first thing you should do is to stop investing. If you are investing, you can't sleep, you're stressed out, you wouldn't be able to make a good investing decision. There's probably something wrong with your strategy, something wrong with your mindset that you need to take a step back and revise. So for that, you need to stop, maybe sell all your positions, so then you start from a clean slate. And if you are gambling and you feel scared, that's when you know you should stop investing in the market and figure things out, invest in your education before proceeding further. Now, I do have a second story, which it's about gambling again. So another subscriber of mine approached me and said she used to be a gambler and she plays poker a lot. And then afterwards, of course, she lost a lot of money in poker. So now she's looking to invest in the market. So I don't know what mentality she had, because maybe she thought investing in the market is kind of like going to a casino where you're playing a game of chance and then hopefully you win in blackjack or you win in roulette or you win in poker or whatever. But she had the mentality that she's going to gamble her way in the stock market and make a positive return out of it. And whenever you identify yourself as a gambler in the stock market, that's exactly when you should stop. So I told her, she's probably not a good fit because she's thinking of gambling in the market when I focus on long-term investing. When I invest in a stock, I'm almost very, very sure that, like 90% plus sure that I will be winning. I'll be right. And if I'm wrong, then I get out of the market. So that is really the intro. And I just want to dive a little bit deeper into gambling because there's something called the house edge. And when you're looking at gambling, it's actually very, very similar to day trading. In gambling, there's a house edge. If you don't know what that is, I'll explain it in a bit. And in day trading, there's also a cost to investing. So what is the house edge? The house edge is that most of the time a player is, gambling against another player. And that is true in poker, that is kind of true in roulette, where you have red and black and so on. But then there is a percentage chance that if a ball or a card is a certain number, the house wins. So there's a very small percentage, like 5% for roulette. When the ball lands on 0 or double 0, the house wins and everybody loses, unless you, of course, invested in those numbers. So that edge is how casino makes money. And you can see that 5% is very small, but because it is quite certain that these 5% will happen, when you're playing many, many games, you'll lose your money little bit by little bit by little bit until you don't have any money anymore. So in a way, the more you play casino games, the more you're going to lose, because the more the house edge will come into play. So let's say you use $100 and then you're playing roulette. Now you might lose $1 at first if you play 1,000 games, but then if you play 2,000 games, you're going to start losing $2, $3, $4, and you're going to keep going, and you're going to keep losing little bit by little bit until you have $0. And that's really what the house edge is. So for roulette, you're going to see that the house edge here, based on Wikipedia, is 5.26%. For blackjack, is a little bit lower, is 0.5%. And here it says, if you don't know how to play blackjack, then it might be 2% for you. So you're going to lose money faster. So for 0.5%, it feels like a very fair game, right? But then when you're playing many times, then this is going to add up and kill your gambling money or your portfolio. So in this case, what is the house edge in day trading or in stock investing? And a house edge here is really the commission per trade. And this is a very recent change, but you're going to find a lot of investing platforms here have a 0% commission. And that is really a response to a trading platform called Robinhood, I believe. So then Charles Schwab, TD Ameritrade, E-Trade, all have $0 per trade. Now, as a day trader, this is fantastic news because it used to be $10 a trade, so then you need to make at least $10 to make your money back. But now, it's $0. So then the question is there a house edge? Now, for stock markets, there's unlimited upside, and the downside is also 100%. So if there is no commission when you are buying and selling, then what is the house edge? And the house edge really lies in what I call the bid-ask spread. So when you're buying and selling a stock, and let's say the stock price is $50, it doesn't necessarily mean you buy it at $50, because people who are willing to buy it, which is the bid price, will be at 49.9, and then the people who are willing to sell it will be at 50.1. So there is a spread, and this spread, however small, is the house edge. So you can think of it that way. So the more you're trading, the more you need to pay for the spread all the time, getting in and out of the market. So that's why when you're day trading, it's really difficult to make money, because the higher your transaction volume, the more money you're going to be losing due to the spread, and the more that works against your favor. So when you're looking at investing return, you really need to look at what is the amount of transaction costs you incur. So for example, if I'm looking at my return, right, and I'm going to share a little bit about my strategy here, my annualized return is 54.47% a year. So the question is, how many investments or trades do I need to make each year to get to that amount? And the answer is actually 5 to 6. And that's actually a lot less than what most people think, because I only need 5 to 6 great investment opportunities to make a killing in the market. I don't need to invest in 100 companies. I don't need to invest in 1,000 companies. I don't need to follow the entire index, which is the entire market. I just need to find 5 to 6 great opportunities to make this kind of return. And that will do two things. First, it makes me more disciplined. I find great companies. I find a perfect time to get in. I get in at a discount and I multiply my profits. Second, it lowers my transaction costs. Because the more you play the game, the more the house edge will become effective and the more the house edge will work against you. So I'm always very, very conscious when I'm making an investment because I want to keep my transaction costs as little as possible. Ideally, in a perfect world, I would invest in one stock and that's it. And that it will keep my transaction cost the lowest, but then I don't have a diversified portfolio. So in order to have a diversified portfolio with the minimum amount of transaction costs, my strategy focuses on around 5 to 6 investments a year. And I find that over the last 4 years, that's an ideal amount. And the return I got here is really the last 4 years. So it has been working out pretty well so far, 54% a year, and a cumulative return is 457% from January 2016 to December 2019. So let me recap this video. This is actually a pretty important video, especially if you're new to the stock market. First, do not be a gambler, period. If you feel like you're gambling, stop. You need to exit your investment and clear your mind, and you need to start over again. Third, if you don't have your strategy written down or somehow you're just investing in the market using gut feel, write down your strategy step by step. And I can actually elaborate this on this point a little bit more. For example, what are the rules when you're entering into the market? What do you look at when you're entering into the market? How much should you buy each time you invest in the market? How much should you buy in a way that you achieve a diversified portfolio? How do you manage the stocks that may be an opportunity but you're not buying yet? Do you have a system where stocks or good opportunities are coming to you instead of you going out and chase them? Because I know people that spends 20 hours a week on investing when I'm spending only an hour a week. So you need to make your system efficient so then you can do it over the long term. Are you doing anything to multiply your profit? This is probably the most exciting part. This is probably the most exciting part of the investment strategy. And I actually have a video earlier today I recorded that talks about investing returns. So you should probably watch that. And then how do you exit in the market? Do you have multiple scenarios to exit the markets? Do you have a target price? Do you have a break-even price? And do you have some behavioral indication that when you should exit the market? Finally, how do you deal with a market crash? Do you have a strategy to deal with a market crash? And how do you prepare yourself for it? So these are all quite important things. And finally, what are the key philosophy, beliefs that you have about investing that is true? And what is your competitive advantage? And all the questions I've talked about earlier leads to this point. You need to know what is your competitive advantage when it comes to investing, because if you don't have one, then maybe you should just invest in a mutual fund and they will manage it for you. So that's pretty much it. And you need a strategy. And once you lay it all out, you need to test your strategy. So that's really the fourth point. And if you don't want to go through the process of figuring out your strategy, writing it down, testing it, and then going through the trial and error phase, I do teach people how to invest in the stock market using my strategy, which is called long-term investing using stock options. So if you click on the first link below, you can go to my website called 5minuteinvesting.com/free case study, where I walk you through the way I invest in the market through a free webinar, and you can learn from there. So that's pretty much it for this video. Let me know if you have any questions. If you like this video, please like, subscribe, and comment below. I am trying to grow my YouTube following so I can help more people around the world in mastering the market and get 30% a year. So I'll see you in the next video.